Afternoon all, how are we all doing? Welcome to this special live stream. I'm just going to cover the opening range breakout strategy in this stream. So the idea today is to basically cover how the strategy works for the opening range breakouts for the indices, for DAX, S&P, Nasdaq, Dow, whatever index you want to trade. Once I've covered the strategy and all the details and the theory behind the strategy, we're going to have a quick look at the opening range breakout EA that you can use to automate the strategy, go through all the settings, and just basically show you how to automate it. So what I'm going to do, first of all, is obviously cover the strategy. So while I'm going through the strategy, if there's any questions, if you could just note them down and keep them to the end. We'll cover any questions at the end, and the same for the EA. Any questions on it, let me know at the end, and we'll go through a kind of a Q&A session on it. So I'll kick off with the strategy. I've detailed out the strategy, the opening range breakout strategy, on the MQL5 blog. I'll put a post in the chat to the blog, and I'll put it in the description as well. But obviously, don't go and read this now, because we're going to go through it anyway. But this explains the opening range breakout strategy in detail. So if you want to go and have a read up about it, it's all there. But I'm going to explain it all, obviously, on the charts. So just to cover the theory behind the strategy and what it's used for. So this is specifically designed for stock markets. So this is a strategy I learned about a decade ago from a stock trader who was mentoring me. And basically, he used a variation of this opening range breakout strategy to scalp the 5-minute charts on specific stocks. And what he used it for was predominantly to scalp high net worth or stocks like today it would be like Netflix and Tesla, all the big players basically. So the idea being is that we have an edge in the market formed by the fact we know when volatility will arrive in the stock market. So stock indices and individual stocks have a flurry of activity when the stock market opens. So for the DAX index, which we're looking at on the screen here, for example, that's 9 a.m. Frankfurt time, which for me in the UK is 8 a.m. So when that stock market opens, there's a large portion of orders that get flooded through the markets, and we get a lot of volatility hitting. For the Nasdaq and the US stocks like the S&P500, the Dow Jones, etc., their open is at 9:30 a.m. in New York, which for me is 2:30 in the afternoon in the UK. So the same thing happens there. I've drawn some horizontal red lines on the chart here so you can see. So this is the 2:30 candle for me, which is 9:30 a.m. in New York. And as you can see, as soon as that open hits the market, we get a huge flurry of orders and movement. And on your broker, you're going to have a different time for this. So an easy way to find that is to come into your settings in MT4 or whatever charting platform you're using and look at the volumes. And you'll see that the volumes spike and increase around the open. So if we look at this one here, for example, you can see the red line here is the open, and the volume here, you can't see it because I've put the red line on. Let me just remove that a minute. So you can see that the volume pre-market was down here. We had the odd spike here and there. And then all of a sudden, as soon as that candle hits, volume spikes up and is pretty consistent throughout the session. So whenever you want to find out what time on your actual broker the stock market opens, you can use the volume to give you that clue. You will always find that happening. If we look at the DAX index, you're going to see the same thing happening on the DAX. If I turn the volumes on, we'll get big volume spikes at that particular time. So you can see here, we've got all the pre-market volume. There's hardly anything happening. You get a little bit of pre-market and then bang, that big move up. And then it's obviously tails off as the session opens. So that is your open there. Okay. So the idea behind this strategy is we have an edge because we know there's going to be a massive influx of movement at a specific time of day. And this happens every single day without fail. The stock market opens, the bell rings, all the large market participants, the institutions, the banks, the hedge funds, the pension funds, they all then start their trading activity. And what they will have, and this is why the strategy works, is a large amount of orders to place in the market which have to be done today. And what they tend to do is they get those orders out of the way at the start. So when the bell rings, I am Mr. Bank, Barclays Bank or whatever, and I've got a load of customers that have said, I want to buy shares in this, I want to buy shares in that, I want to buy a load of sector purchases on this particular thing. And what they will do is they will execute all those orders at the start of the market. And the reason they do that, if we get that candle back on at 10 a.m., which is there, the reason they do that is because they know that they can get their orders filled. And this is often referred to as the opening cash balance or the opening balance in the stock indices. And what it is it's the first flurry of orders that lands. And this is the first 5-minute candle I've just highlighted here on the screen at the open of the Frankfurt session on the DAX. So what's happening here is a lot of bankers are executing orders and because they know that they can get their orders filled by other banks. Remember, if you're going to take a buy in the market, you need somebody on the opposite side to be selling to you. So there's always got to be two participants in a transaction. When the banks know there's going to be a lot of other banks trading, that's when they want to dump all of their orders, as much of their orders as they can, into the market. And you'll see this is where we get the highest spike in this first sort of 15 minutes. So that's what happens at the open. We get a large volume of activity coming in. Once those initial orders are placed, that initial cash balance is in, what then tends to happen is the speculators take over. And these are the guys, again, in the banks and institutions that have got enough volume to move the market. These are the guys that are doing their intraday transactions. And what they're doing is they are taking the market off in a direction. So they will be constantly dripping orders into the market, buying particular stocks or sectors and driving these indices in one direction or the other. Now, the thing that we will never know when you get that initial open in the market is which way they are going to take it. And it doesn't matter whether yesterday was a bull day, a bear day, a rotation day, or whether we are above the 20 moving average, below the 20 moving average. On an intraday basis, it really makes no difference. If we have a look at a daily chart on the DAX, you'll see that regardless of what happened on the previous day, it makes no impact on the next day. So just taking candles, for example, here, we've got 3 rotation days in a row here. That doesn't mean that day 4 is going to be a bull day, a bear day, or whatever. If you get an inside bar, as we've got with this candle here, doesn't mean that the next day is going to break that inside bar. We've got another inside bar. So what happens on the previous day intraday makes very little difference, and we don't need to worry about it too much. But overall, if you're in an uptrend or a downtrend in the stock market, at the moment, as I'm recording this, we're in a bear market, but it can have an impact, obviously, on longer term trades that you take. But intraday really doesn't matter. A bull day can follow a bear day, a bull day can follow a bull day, a bull day can follow a rotation day. It makes no difference whatsoever. One thing that is important to understand, though, is that there are only 3 types of day that you're going to get. You're going to get a trend day, which goes up. You're going to get a trend day, which goes down. Or you're going to get a rotation day, where we push up and down, but don't actually go anywhere. That is all that's going to happen in the market, if you think about it. There's only 3 things that can happen. As we move through time, price goes up or price goes down. And it can go up and down. Okay, so those are the types of candles we get: bull, bear, and rotation, or dojis, or dojis, or spinning tops, or whatever you want to call them. Doesn't matter. It's basically the market moving up and moving down and into the middle. So when we look at that on an intraday basis, and we have our opening candle here, we have no idea when this candle is formed, when the market opens, whether they're going to want to go like that all day, as they have today, whether they're going to want to go like that all day, as they have on previous days, or whether they're going to go like that, like that, like that, and then finish roughly where we are. But we don't need to know that. It doesn't matter to us. If we're trading intraday, we're just trading the market movement and the volume at the open. So what we do, when we get our first 5-minute candle painted, very simply, we just draw a line at the top and the bottom of that candle, which is this one here. Okay. And that is our initial opening range. Now there's different ideas on what the opening range is. Now personally, I like to use the 5-minute opening range because that's what I tend to find gets the fastest sort of breakouts from, because obviously what's happening in the beginning of the market open is you're getting a large flurry of orders coming through. So that 5-minute opening range is where I tend to find most of the orders get landed. Some people use a 15-minute opening range as well, or a 10-minute opening range, and there's no right or wrong. The opening range is what you class as the initial start of the day or start of the market. So this is the 5-minute opening range on this particular day. I'm going to draw in also the 10-minute opening range, which is the top of that candle there, because these are 5-minute candles. And then, whoops, if we look at the 15-minute opening range, it would be the top of that candle there. So you've got 5, 10, and 15 minutes. Okay, so there's your level 1, 2, and 3, if you like. Okay, so it doesn't matter which one you choose. On this particular day, if you'd have got in on a 5-minute or a 10-minute or a 15-minute, you would have made money. And we did this morning. Any of you that were in the live room this morning saw the trades this morning, went straight off, easy target today, as we did yesterday as well. But that's basically the premise of the opening range breakout. Now, we only trade it, obviously, at the open. It's called the opening range breakout. So you trade it at the open. So for Frankfurt, we're going to be trading the 9 o'clock open. And for any New York or US stock index, we're going to trade it at 9:30. And this strategy will work on any index or any instrument that you know has volatility at a specific time of day. So you can trade the opening range breakout on the indices, but if you wanted to, you could also trade opening range breakout strategy or a breakout strategy like this on news events. So for example, if we've got a news event we know that is coming out at 1:30 p.m., for example, we could look at the chart at 1:25 and look at what's happened in the last 15 minutes and take the high and the low and have that as an opening range. And then if we get a new spike, we could use that as an opening range breakout as well. So the strategy is just a breakout strategy. Like any other breakout strategy, it's a breakout of a range. But in this particular instance, we have the edge in the fact that we know the volatility is going to happen at a specific time of day. Okay, so the strategy basically can be used in a number of different ways. First one is you just take that 5-minute opening range and you place a pending order just above the high. Let me just draw this one properly. So just above the high of the candle and just below the low of the candle. So we've got a sell stop there. If they decide to drive the market lower, we get in short. If they decide to drive the market higher in this case, which is what they did, we get in long. All right. And we basically, as soon as we get into this trade, what I have found is the best way to trade it is to put your stop at the opposite end. So if you have a pending order at the high there, put your stop at the low of that 5-minute candle. Because what we want to happen is either the breakout is going to work and we're going to make money, or the breakout is going to fail. And if it fails, we want to get out and get in the opposite direction. And you can repeat that process as many times as you like. Now, this open here was a very clear-cut, long, easy one to trade today. But you will find others will be moving up, move down a little bit, then it might go down a bit, then it will come back up into the middle, then it will move up, then it will pull back, and then it will shoot off. So in that case, you could take a long trade there, short trade there. That one would have stopped out. That one would have then stopped out. You'd have got in again on that one, and that one would have made you the money for the day. So you've got to keep your stops tight and wait for the range break to actually happen. And it's not always going to happen on this 5-minute candle. Sometimes it will be the 5, the 10, or the 15. We may have it move up for 15 minutes, pull back down, sit around for an hour, and then make the break. You never know. But as long as you're managing your stops, and you can trail these stops as it moves, obviously, you're going to make money most days. The days you will struggle with this type of strategy, it's not all going to be plain sailing like this every day, obviously. But the days you're going to struggle with this strategy is when you have rotation days, which the rotation days will tend to rotate around the opening range, and you'll just get movement like that. Where it will end, you never know. It could end up there, it could end down there. Just don't know. But what's happening is it's just moving up and down and up and down and up and down. On those days, you need to make sure that you're using a good tight trailing stop. So when we get a breakout of the opening range, what we do is we just basically trail our stop as price moves in our direction. And how you try your stop is entirely up to you, but a logical thing to do is when you're pushing in one direction, every time it's continuing to make new highs, you just keep trailing. Okay, so keep trailing underneath the candles, and then eventually you will get stopped out, and that is your trade over. Done. It's a one kind of shot, one kill type trade. So you get in and you get out, and that's it, it's done. But if price pushes up and then pulls back down again into the range, and you get stopped out here, and then it decides to push back up again, there's nothing to stop you entering again. Don't forget, we don't know when they're going to move into a trend day, if it's going to be a trend day, or what's going to happen. So if your first trade fails and you stop out at break even, or you stop out with a small loss, or you stop out with a full loss, you can always get back in again. Okay, so you don't, if it doesn't work first time, you get multiple bites of the cherry, and you can do this all day long. I'm going to show you the EA in a minute, and how the EA trades it, and the EA can do this for you. But what it will do basically is it will keep getting you into trades, and you can quite easily make small amounts of money over and over and over again on range days or rotation days as price moves up and down outside of this 5 or 10 or 15 minute range. Okay, so that is the strategy. If we look at the Nasdaq, for example, same thing happens on the Nasdaq. Okay, so this is yesterday. That is the 2:30 candle, or 14:30 candle, which for me is 2:30 in the afternoon on my broker. So just move that out of the way. That is the opening range. Okay, and I've used this, the Nasdaq today as an example, or yesterday as an example, to show you what happens in a failed breakout. So there's our 5-minute opening range. If we put a pending order above that high or a pending order below that low, what would have happened, and did happen to me yesterday, if you were in the live room yesterday, you saw this all unfolding, is we took a long, it pushed up, and then it pulled back down again. We got stopped out on 2 positions down here, because I took one on the 5-minute range break, I took one on the 10-minute range break, and then it pushed back down, stopped me out of both of those positions, and then I entered short here and took the profit on that break to the downside. Okay, so I don't know, you never know which day it's going to break, whether it's going to be that sort of price action, whether it's going to fly like this, what's going to happen. But the important thing is you have a strategy in place for your breakout entry and your stop. Now, there's variations on the strategy, and there's endless variations that you can use. So taking this as an example of our 5-minute opening range, you could decide, actually, I don't want to trade the 5-minute opening range. I want to trade only a 15-minute opening range. So in this case, you would have this as candle 1, 2, and 3 on the 5-minute chart. So that is your 15-minute opening range. You would only take a break high of that one or that one. In this case, if you'd have done a 15-minute opening range breakout instead of a 5-minute opening range breakout yesterday, you would not have had those 2 losers that I got yesterday. You would just had 1 winner. You'd have taken that trade, flown down there, and then you got out somewhere around here when it started to pull back. Okay. Remember, if you're going to be trailing stops behind candle highs, which is quite a common way of getting out, you'd have got out on that candle there. So that would have been your profit yesterday on that trade there. Okay. So that's the basic strategy. There's lots of different variations of it with stops as well. So if you're entering with a 5-minute opening range, pending orders, you can get in and you could have your stop loss when you enter underneath the candle that breaks. So instead of using the opposite end of the range, you could say, actually, I just want to use the low of that candle. Or you could use a 50% of the range or something like that. So that's your opening range there, which is, in this case, 70 points, 70 pips. So you could say, I'm going to use a 35 pip stop today, which is 50% of that. In this case, then obviously what would have happened is you'd have got your breakout there, your stop would have been there, and you would have been stopped out here instead of stopped out here. So there's lots of different variations you can use. And one of the reasons I built the EA was to backtest all of these different scenarios to find out what works best and what doesn't work. And to be honest, virtually all of them work. So it doesn't really matter too much whether you decide to use a stop at the opposite end of the range at 50%, whether you want to use a fixed pip stop of 30 points, 35 points, 50 points, whatever. They all work, because what's happening here is we are either getting a violent break that way or a violent break that way the vast majority of the time. So it doesn't matter where you put your stop. Most of the time you will find at the open, the movement is so violent and so fast that it shoots off in one direction. So it really doesn't matter if your stop was here, here, or here. When you got into that trade, it just flew. So the tighter your stop, obviously, the more you're going to get stopped out, which is standard stuff. So if you took a break here on that candle, and this candle here decided it wanted to push up 50% of the candle and then fly down, yeah, you'd have been stopped out. Some days you'll be stopped out, other days you won't be stopped out. It swings and roundabouts, so there's no right or wrong. And if you use the EA and do the back testing, you will see that there's very little difference in the actual profitability and strike rate depending on the stop loss you use, because the days where you find you get these massive breaks and you think, oh, if only I'd have used a 50% stop, I'd have made twice as much money because my lot size would have been higher. You'll look at another day and you go, well, I'm glad I didn't use that 50% stop because it pushed up almost to the top of the range and then it flew back down. Some you win, some you lose. That's trading. So there's no right or wrong, but that's the strategy. And you'll find it will happen over and over and over again. I've marked a couple of opening ranges here so you can see them. We can mark up more, but that's the opening range there. So you can see we're just moving along, trading, and then bang, market moves. If we go back to previous day, I haven't marked any more up on this one actually. So let's look, it's 4:30. There we go. So there's your open. So that was a particularly choppy, violent open. Very, very large range on that one. Somewhat there. So we broke to the downside, then we broke to the upside, and then we sat in the middle, and then we broke towards end of day. So this is a prime example of a rotation day that actually ended as a trend day. And these are the types of days where you're going to get chopped around a bit, and there's nothing you can do. So you would have taken a short there, you would have taken a long there, you would have possibly be stopped out on that long, maybe, maybe not, depending where you put your stop, but you would have definitely won on that trade there. Okay. And it obviously depends how many candles you take as well. You take the 5 minute, the 10 minute, or the 15 minute. In this case, on this day, the 5, 10, and 15 minute were all actually at the same level. So there's your 5 minute open. Your 10 minute open was an inside bar of the 5. Your 15 minute was an inside bar of the 5 as well. So that is your 5 minute, 10 minute, and 15 minute opening range. It's all the same thing because the first 5 minute candle made all the movement. Okay, so that's the strategy, the basics of the strategy. Stop loss is completely up to you. You can use a trailing stop loss, which I found is the most effective thing to use. And obviously you can use a TP as well. So you can use risk reward for this type of strategy. So your opening range here, for example, if you wanted to use a 1.5 to 1 risk reward, you'd be looking at something that was 90 odd pips, wasn't it? 70 pips. So you'd be looking at somewhere down here, 140 would be a 2 to 1. Yeah, so that would be a 2 to 1 down there. Yeah, so you can use a risk reward strategy just to take profit at a particular level. Personally, I found it's better to just let them run with a trailing stop because you don't know how far this is going to go. This morning is a prime example. If I show you the DAX trade from this morning. So that's a Nasdaq trade. That's the Nasdaq trade from, well, let's look at that one. Actually, what would do? Okay, this is a better example. So this is the DAX trade that I took this morning. So there's your opening range low of the 5 minute candle. That's your opening range high of the 5 minute candle. That's your opening range high of the 10 minute. That's the opening 15 minutes. So we got the 5, the 10, and the 15 there. So I took an entry long on the 5 minute, took an entry long on the 10 minute, took an entry long on the 15 minute, got out the whole lot up there with $700 profit. And that was my profit target for the day, $720, because this is only a £36,000 account. So I'm not looking to, make an absolute fortune, but that was where my target for today was. But you see how much further it went. If you just use a trailing stop on the candles, which make the new highs, or however you want to do it, 300 pips, 500 pips, whatever you want to do, you'd still be in this potentially now. Yeah, so that $700 or whatever I made there potentially would be sitting at something like 2,000 now. But it's entirely up to you. As I say, you can backtest all of this with the EA. There's lots and lots of different variations. Okay. So that's the strategy. It's very, very simple. You can trade this manually very easily yourself. All you do is you wait for the first 5-minute candle at the open, and then you place a pending order at the high. Whoops. And you place a pending order at the low, or just under. I usually offset this by a little bit. And then whichever way it breaks, you're in. And obviously you would set your stop loss at the opposite end, or wherever you want to place your stop loss. As I say, there is no right, there is no wrong. Okay, so stop loss on that would be somewhere down there. Okay, so very easy to trade manually, and you just take, and you can take the 5, the 10, or the 15. As I said, it's entirely up to you. So that is the strategy. Any questions on the strategy at all at the moment? Let me know now, because now I'm going to cover the EA. But obviously, if there's any questions on the strategy, it would be good to get those out of the way now. Right. It doesn't look like there's any questions, which is good. It means I've explained it properly. So let's have a look at the EA. So this is the opening range breakout EA. So let me just open a chart. The opening range breakout EA basically is designed to do all of this automatically for you, and automate the entire thing, so you don't have to basically do it every day yourself. So it's something I built to test this strategy in more detail, as I said, because I used to trade it a long time ago. And unfortunately, I stopped using it because I stopped stock trading, and I never thought to apply it to the indices because I always used to use it for stocks. So I built the EA to backtest the strategy on predominantly the DAX, which is what I mainly tend to trade, and obviously the Nasdaq in the US session. But as I say, you can trade any index or anything that moves at a specific time. So you could use this in the stock market as well, obviously. If you want to trade individual stocks, this will work on individual stocks as well. So the EA basically has an awful lot of settings. So what I'm going to do is I'm going to run through some settings in the strategy tester so we can watch it actually trading live and see what it does. All right. So I'm going to quickly run through the settings for the EA. So this is the opening range breakout EA. I'm just about to launch this version onto the market this afternoon. So I'll go through the inputs quickly first, just so you know what they all do. First of all, we've got a starting balance. So this is the starting balance of your account. And we've got a profit target to reach, which is a profit target that you want the EA to aim for. Now, these two are just going to display on the chart. In fact, what I will do is I will just start it running, and then we can see it painting information on the chart, which is probably the easiest thing to do. There we go. So we've got some trades there. So there's your opening account balance. There's your overall profit target. Total bank so far, nothing, because it's obviously just started. Profit left to go. So that is your how much profit you've got left to go before you hit your target. Your daily profit target and your closeout level. Now, the vast majority of these settings here, let me just stop the EA and go into the settings. The vast majority of those, that information there in those settings is to do with prop firm evaluations. Okay, so a lot of people want to use automated strategies to pass prop. And a lot of them will or will not allow you to use EAs that you've purchased commercially. But what I would say about that is the EAs that you've purchased commercially are the ones that they don't want you to use, are the ones that are all set to do nothing but pass evaluations with high risk. And they are the sorts of EAs that are never going to work long term. So what they want to avoid is having everybody using the same EA with exactly the same settings, taking exactly the same trades on hundreds of thousands of dollars worth of funds. So The reason I've set this EA up to have this many inputs is so it's highly configurable. So first of all, your requirements for trading the strategy, but secondly, so that you're trading something unique. So you could trade multiple prop accounts with different variations of the strategy to vary your portfolio or vary your risk on different prop firms. So obviously, if you want to use this on your own funds, absolutely fine. Doesn't matter, does it? You're probably not even going to use this section. But anyway, so your account starting balance is designed to be what your account is. So this account that you're looking at now is a 100K funded account. Profit target on a 100K account is 8%, which is 8,000. Daily profit target to stop trading is 2,000. So if I get to 2% increase on the account, I want it to stop. Okay. If it gets to £2,500 in losses, I want it to stop. Okay, because bear in mind, you've got a daily drawdown limit on most prop firms. So you want to stop, but that's not really prop firms. That's a rule you should be employing on your own funded account as well. If you have a bad day and you've lost 2.5%, you should stop because you're not having a good day. Don't push it, because all that's going to lead to you is over leveraging, over committing yourself and over trading, and that will just kill you anyway. So you want to stop at a specific point. You can choose whatever you want, 1,500, 1,000, whatever. If you're only trading a £1,000 account, you might want to stop at £15, 1.5%. I don't know. It's entirely up to you, but it's all completely configurable. Close all trades when the stop. Close all trade and stop when the target is hit. What that will do, if you set that to true, is when it gets to your profit target, in this case $2,000, it will close those positions out and it will not place any more pending orders in the market. Cancel pendings and stop if target hit does a very similar thing, but what it does is it works on trade close. So when you close a trade out, i.e. it pulls back and stops you out, or you just close it out for any reason whatsoever, what that will do is if there are no trades running and you have achieved your daily target, it will close all pending orders. So it will cancel these off. Okay, so the difference between the two is this one, as soon as you get to $2,000, it will shut the lot. Okay, but it won't cancel off pending orders. If you want the pending orders cancelled off as well, you need to make that true. And that will also then, if you've achieved your target, cancel your pendings. If you haven't achieved your target, i.e. we've just made a good trade and we've closed the trade, but we've only made $1,500, for example, it won't do anything. It will leave the pendings in place and it will carry on taking trades throughout the day. Right. Risk and targets, this is all fairly self-explanatory. Use a fixed lot size and a percentage of the opening range as a stop. So if you set that to true, you enter the lot size you want to use. So 15 it's set at here, and it will take every trade at 15 lots, which is obvious. It's fairly straightforward, obviously, isn't it? The stop loss will be placed at a percentage of the opening range, and that is this setting here. All right. So when it starts to trade, it will place the pending order and it will place the stop loss at a percentage of the opening range. Okay, so I'll quickly cover this just to show you because it's all displayed on the info panel as well. So if we just move forward to take a trade, okay, so I'll stop it there. So the opening range 1 is here. Opening range 2 is there. Yeah, so there's opening range 1 and opening range 2. So as you can see over here, it displays here, opening range 1 is 460. Opening range 2 is 601. Our stop losses are 505 and 661. So this is 110% of 460. And as you can see on that pending order here, it's placed its stop down here. Okay, so it's just outside of the opening range. If I had set this input here to be 50, for example, it would place the stop halfway on that range. So the opening range was there. It would place, sorry, was it there? I can't remember what it was. No, it was there. Sorry, wrong place, wasn't it? It's that candle there. So it would place the pending order there and it would place the stop there, which is 50% of the total opening range. Okay, so you can adjust that yourself. Use money and opening range. So this does the same as this one. So if you set that to true, it will trade lots. If you set that to true, it will trade a risk amount, and it will automatically calculate the lot size for you. So I'm risking $500, and as you can see, it's gone in with 9, I think it's 9.13 or something down there. I can't quite read it. Let's run it again. So you'll see that the lot size it takes is going to be different at each level. Okay, so this one is 7.14. This one is 9.34. The reason being is I'm asking it to risk $500 every time it puts an order into the market for me. And obviously, because this is a smaller distance than that, the risk on this second trade is smaller. So therefore, it takes a smaller position. And if it pushes up now to the third opening range, which I've set at 15 minutes, it will take a smaller lot size still, because I've asked it to place it at 110% of the opening range. Okay, so those options are available for using the opening range. We also have a use fixed pip stop and money amount risk option as well. And what this will do is it will use your monetary amount that you place there, but it will place the stop loss at a fixed pip. So for example, 40 pips, 40 points, and you would enter that in there as a 400, for example. Okay, you can tell what your stop loss and take profit or trailing stop entries needs to be, because they are displayed on the EA panel here. So some brokers will use 1 digit after the price. So in this case, we've got 1 digit after the price. Some brokers will use 2 digits after the price. So for example, on my E8 account, as you can see on the DAX, they use 2 digits. So at the moment we're trading at 144.34. And if we look at the other account, which is my Forex funds, it's trading 159.74.8. Oh, sorry, this is, there we go, 144.02.5. Yeah, so the difference is 1 digit or 2 digits. If you have a 2-digit broker like this one, if I just run this, you will see that the opening ranges are in the thousands rather than the hundreds. So that's the difference. This is a 33 pip or 33 point range on this broker, because they use 2 digits, is displayed as 3,300. If we were to do the same thing on this broker that uses 1 digit, it would be 330. Yeah, so that's the difference. So you just need to be aware of that when you're putting in stops and trailing orders, things like that. So your trailing stops, your tighten trading stops, the distance between orders, which I'll cover in a second, and your fixed pip stops. You need to put either in 400 or 4,000, and it will depend on your broker. Okay, so you can easily test that. You just come into the strategy tester, and all you do is you just run the EA and the strategy tester, and obviously it will tell you whether you should be using hundreds or thousands. You've got a fixed pip stop, fixed pip stop, which we just covered, and you can also only set one of these to true. Okay, so if you want to use, in this case, monetary risk, that is set to true. The other 2 are set to false. If you set all 3 of them to true, what it will do is it will take 3 trades at each level for you. One using a 15 lot entry, one using $500 of risk, and another one using $500 of risk with a fixed stop. So if you really do want to take 3 trades at a level, you can do it that way with all of those. Okay. Position 1 TP multiplier as a percentage of stop loss. This basically will set the take profit levels for you. So this is risk reward basically. So if I set this to 100, set this to 200, and set this one to 300, ignore that for a minute, you'll see that what we'll do is we will place all of our trades with a stop at the other end of the range, 110%. Okay, there's 1, 2, 3. So it's taken 3 trades, and you can see the TPs on them are all at different levels. So the first trade was here, and the TP is there. So that is a 1-to-1 risk reward. The second trade was there, and we ask for a 200% of the opening range for our TP to be placed. So that is a 2-to-1 risk reward. The third entry is there, and that has set a 3-to-1 risk reward. Okay, so what that multiplier is a percentage of your stop loss, as it says there. So that is 100% of my stop loss, 200% and 300% of my stop loss. So if my stop loss is 40 points and I set a 200% TP multiplier, it will set a TP at 80 points. Okay, it's all fairly self-explanatory, just standard risk reward. Auto exit trades at percent balance. What that will do is, if you set that to true, it will automatically get you out of all of your positions when you hit a percentage profit target. 12%, probably, that'd be nice, wouldn't it? Let's go for 2%. So what this will do is it will automatically close all of my positions for me if I get to 2% in profit. So if I get it to take a trade for me and I don't use any of these settings up here, it will just trade away. And as soon as it gets to 2% gain on my account, again, very handy for prop firms, it will just shut the positions out. So if you, for example, are trading a prop firm and you've got a 8% target and you are sitting at the moment at 7.4%. Today, we've got an opening range. We're just about to trade with the opening range breakout today. We only need 0.6% to hit target. So all you would do in here is put that to 0.7, I would, or 0.65, just to be sure. So as soon as the EA takes the trade, if we get to 0.65% profit on the account, bang, shuts it. So it's very, very handy to use if you're really close to passing prop. Or if you just want to set the EA up to just bank a percentage per day for you. That's what that would be used for. Trading ranges and times. So we have our ranges, obviously, that we can trade. So I've got this one here. Okay, so these are obviously our opening ranges, and we are measuring the distance of these opening ranges. So what the settings here will do is allow you to set a minimum and a maximum. So for example, if we open and it's a bank holiday, we are going to get a really tight opening range because there's going to be very little liquidity in the market. So if, for example, the market opens and we only get a 150 pip open or a 15-point open, we might not want to trade that because there's not likely to be a massive breakout, is there? A large amount of volatility. So you can set this to say, right, well, if we're going to get really, really quiet opens that go like that, I'm not interested. I don't want to trade. And equally on the other side of the coin, if we get a huge open, which is something like, and I've seen this happening, 100-point open, the chances of you getting any more continuation movement up or down from that open is a lot less. Okay, so if we've got a massive open like that, you probably don't want to be taking trades because it's done all of its volatility. It's probably hit its average daily range within one candle. The chances are it's going to do that and chop around for the rest of the session, or at least for the start of the session. So you can also now set a maximum opening range in there to say, right, if you open and the opening range is going to be more than 500 points, and you can work this out, you can look at what the average opening range is. If it's over 800 points or whatever, then I don't want to be trading it. Okay, so that's what those settings there will do. Personally, I've found 100 is a kind of a sweet spot for the minimum. The top, it varies. Some of the backtesting that I've done, 800 has been a pretty much of a sweet spot, which is an 80-point opening range. Anything above that, I find it doesn't really make an awful lot of difference. So for me personally, I'm not going to be using this. I'm just going to be leaving it set at 1500, which does mean if we get a massive spike happening, and quite often what you will find is these sorts of things will happen when there's been a sort of end of month flurry or something like that. So towards the end of the month, we get a lot of activity on the stock markets with people just going flat and basically banking profit. End of quarter, end of month, we get a lot of volatility. So what you tend to find is on those days, you get these huge moves and then nothing happens for the whole day. Those huge moves, when they're that big, you just don't want to get involved. So anything above 1500 is basically where I've said I'm not going to get in. So range starts. This is all pretty self-explanatory, but you do need to work out what your broker time is for each of these. So range 1 start, range 1 end. So what this is your initial opening range. So I'm saying the stock market opens on my broker at 10 a.m. and I want you to take the range from 10 a.m. to 10:05. Okay, so that is my first opening range. My second opening range goes from 10 a.m. when the market opened to 10:10. And my third opening range goes from 10 o'clock in the morning to 10:15. And those are my three opening ranges. Okay, so looking at this one here, opening range 1 is the first 5-minute bar. Opening range 2 is the first and second opening range. So that's the first 2 bars. And the third bar here is the 15-minute. Just move that back a bit so you can see it easier. Okay, so there's your 5-minute candle, your 10-minute, and your 15-minute. Now, today, all three of these were 1, 1, 1. Okay, other days you might find the 10-minute is inside there, the 15-minute is down there, or the 15-minute could be like that, in which case your 15-minute range is going to be much wider than your 5-minute range, but it doesn't really matter. What it's going to do is place a pending order at or just above the highs and lows of those ranges. So you set whichever ones you want to use. You could say, I want to trade the first 5 minutes, and then I want to trade just the 15-minute, and then I'd like to trade from the first half an hour to the second half an hour, which would be 11 o'clock. So you could say, I want you to draw a range in from 10:30 in the morning until 11 in the morning. Okay. So you can change the start times and end times of each of these to be whatever you want. But what would normally be used would be the same start, and you just take multiple opening ranges. So you could say, I want to take a break of the first 30 minutes, for example. Yeah, so that will give you a break of the 5-minute range, the 10-minute range, and then, 30-minute range. But it's entirely up to you. I have found personally 5, 10, and 15. Really, that's when the majority of your opening cash balance has gone in. So anything after that really doesn't make a lot of difference. You've either missed the move, or what you can do is try and capture the reversal of the move. But either way, it's entirely configurable. You can go and test all of this in the strategy tester as much as you want. Stock trading time is 10:30 for me, which is basically end of day. So I want the EA to stop trading at the end of the day. So I want it to trade all day. I want it to just continuously trade the DAX until it either hits my profit target or it hits my loss. I want to try and get that every day as much as I can, or as close as I can to it. So I'm telling it to trade all day. You could say, I only want to trade the 5-minute range, the 10-minute range, and the 15-minute range. And I want you, if we haven't got anywhere for the first hour and a half, I want you to stop. Yeah, so you could say, I want to stop trading. I want you don't take any more new orders after 11:30. It will leave the pendings in place, but just don't place any more pending orders. Okay, this will all become clear when I show you the EA in operation in a minute. Close all trades at stop trading time set to true. This I would always recommend you keep on. Basically, as soon as you get to that end time, it will shut all positions and cancel all pending orders. Yeah. So the reason for that, and the reason I have it set at 10:30, is, let me just load up a set file. One sec. The reason I have it set at 10:30 is because I want it to close my positions at end of day because of gaps. So with the stock market and the stock indices, you will find you get gaps. Depending on your broker, those gaps can be quite large. Also, the volatility and the spread can widen a lot. So you want to be closing out end of day. Don't forget, this is an intraday strategy. We're trading it today. We're not trading it tomorrow or next week. This is intraday. So you want to be closing your trades out ideally end of day. I've tested this and found very little, if any, actually, is actually more detriment, but I found no advantage to running multi-day trades using this. You will get the odd instance where you get a multi-day run. So if you look at a daily chart, yeah, if you took the opening range breakout here on this day, for example, yeah, you'd have had a 2-day run on that. But what you would have found is at some point here, you would have got a pullback, and that would have probably taken you out on a trailing stop anyway. So holding it overnight, I found that most of the time, the following day, you get a pullback even before you get a push. So you get stopped out anyway. So I don't think there is any point. But again, test it if you want to. These are the triggers for taking the opening ranges, fairly self-explanatory. Take range breakout 1, yes. Take range breakout 2, no. Take range breakout 3, no. Okay. The important thing to remember with this is they need to be done in order, right? So if you only want to use one opening range, you need to use breakout 1, that one. If you want to use 2, you use 1 and 2. Okay. Sorry, it's that one and that one. If you want to use 3, it doesn't matter, obviously, because you're using all of them. But there is only 3, but they need to be done in order. The reason for that is because we have a setting down here called take multiple trades if at the same level. And what that does is if you have an opening range 1 like that, an opening range 2 like that, and an opening range 3 like that, all 3 opening range highs are at the same level. Okay. And what you can have is this setting down here to take multiple trades at the same level turned off. And what it will do is it will only place one pending order there. Okay. If you want it to take all 3, it needs to do calculations. Or if you want not to take all 3, if you want it to take just 1 or 2, it needs to do calculations based on, is this level the same as opening range 2 or opening range 3? You don't need to know about the logic too much. I'm not going to go into it in any detail, but just make sure you use these in order. Okay, so if you're only trading 2 breakouts, use 1 and 2 and turn 3 off. Continuous mode for opening ranges. What this will do is when you get your opening range, I'm just going to use 1 as an example here. If we break out and we stop out, okay, and you have this set to false, that's it. You're done for the day. It's taken the opening range. You didn't win. That's it. If you have this set to true, when we close back down, what it will do is it will place another pending order and have another go. Remember what I said earlier about opening ranges and rotation days. Sometimes we get a push up and a pull back, and then it will do that, and then it will go. Okay. If you have this set to true, continuous mode, what it will do is it will just keep taking opening range breaks to the upside until it works. It's very rare you get an opening range that just does that all day long. At some point, it will fly. It has to. It always does. Unless you get the odd day, and I say that's not strictly true, but you do get the odd day where, I'm just trying to find one. There you go. There's an odd. So you do get the odd day, which is absolutely tiny rotation. Those days, yeah, you probably get chopped up, but that's what the maximum loss is there for. All right. Even if you get a rotation day like this one here, you'll see that you do get some kind of large breakout happening to one direction. And that's what we're going to make our money on with the opening range breakout strategy. So ideally, you want to make sure that the EA is able to take multiple entries. Most of the time, you will find the opening range will work either the first time or fail the first time, and the second one will work, like I showed you earlier, that example, right? So usually you'll find it will work on one of those. Sometimes you'll get chopped around 2 or 3 times and then it will go, in which case that's the one you're going to make your money on. But if you don't have that set to true, it will only take one opening range. And it does the same thing for opening range 1, 2, and 3. I'll show you some set file examples of this in a minute. Trading stops, use trading stop loss. Always use a trading stop loss. You don't have to, obviously, but in my experience, you should always use a trading stop loss and never use a take profit. Okay, so TPs, I always have mine set to 1,000%. Yeah, so I don't use take profit at all. If the market's going to go parabolic, why would I get out there? If that's the opening range, my stop's there, why would I set my TP there on a parabolic move? You don't know when the market's going to go parabolic. So don't take profit just because you fancy getting a 2-to-1 risk reward. Take profit when the market tells you it's coming back. Okay, and that's what the trading stop's used for. If you turn that off, obviously you need to make sure you're using a TP, because otherwise it's just going to take a trade and it will either close it at end of day, which is again another good strategy, or it will close out your TP. So trading stops, all the strategies I use a trading stop. Distance to start trailing stops is whatever you want it to be. Start trailing when in profit. That will, if set to 0, start trailing the stop immediately. Otherwise, it will need to be X in profit before it starts to trail. Again, this is all standard stop loss trailing stop stuff. You can look all this up if you don't know how to use trading stops. Tighten trailer when profit target is reached. This setting here, when you get to your profit target, in this case $2,000, it will automatically tighten up your trailer. So if in this case here, we've got a 600-point trailer. So when we move up here, it will start trailing by 600 points. If we get to our $2,000 here, what it will do is it will tighten that trailer up to 200. So what we're saying is we're in profit. We've pretty much hit our daily target. So I don't want to get taken out with a 600 pip stop on a massive down candle and lose 50% of my profit. So lock in way more of it than I was before. Okay, so that's what that's doing. Really handy feature. So when you're getting to that point where, oh my God, I've got $2.5 grand profit, I only need another $300. What you don't want to do is get stopped out for a massive amount. So the trailing stop tightener, as I call it, is a fantastic feature. I've been testing that and it's really, really good. I'll show you some examples of it working in a minute. Add to singles, pretty self-explanatory. Add to single trades when in profit. So if you've just got one opening range running, okay, you can tell the EA to automatically enter for you another position. So for example, if I set this to 200 and true, when price has moved 200 pips in profit, it will add a second position for me. So it's adding to my winning trades, which is again a massive advantage. So when these opening range breakouts happen, if you're going to get a massive runner, you want to be on it with twice as much, basically. So it's also going to use the same stop loss settings you had before. So just something to use if you're only using one opening range. But personally, I always use multiple opening ranges because that does the same thing if you think about it. If you just take one opening range, you need to add to it to maximize your winnings. If you're taking 3 opening ranges, let's say that's opening range 1, 2, and 3, you're automatically adding anyway. So you would never use that. And in fact, I don't use that at all because I trade multiple opening range breakouts. So, but that's there if you only want to trade singles. Comments, if you want to use the comments, this will basically put comments on your orders. So when you're in trades, I haven't got any trades open. Yes, I have. Comments. So that will put a comment in for you, basically on your trades. There you go. So this one, I'm using another EA at the moment, my market reversal alerts EA. This is the comment, obviously. So that's all that is. Activate on bar close or on tick. Otherwise, basically that's set to true. So I'd always recommend you only take trades on bar close and you only move your stop losses on bar close. The caveat on this is it's actually covered in the manual. I will read it from the manual because it is quite an important part. So what the activate on bar close does is it affects these functions: auto exit at percentage balance, trailing stop loss, and add to single trades when in profit. So with those 3, auto exit at percent balance, obviously what that does is as you move into profit, if you set it to close your trades out at 1%, it will only calculate when that is set to true when a candle closes. So the disadvantage of this is you could move up to 2% in profit and then it comes back down in one candle to 0.7% in profit and you won't actually get your 1%. The advantage is when it pushes up there, it will push you into 2% of profit instead of 1% profit. So you actually make twice as much because you're letting the candle close. If the candle keeps closing bullish, keep trading. Don't get out because it's pulled back. We know that obviously price moves within a candlestick. So that's why I always like to use candle close. Trailing stop loss. the trading stop loss will only move on candle close. So if you've got a 60 pip trailing stop, when that candle closes, it will move up 60 pips from the high of the candle. And the add to single trades, so what that one will do, which we just looked at, is when a candle closes, if the distance is, in this case, 150 pips, which you wouldn't use, it's too big, above your initial entry, it will add your second order on candle close. All right. If you change this to false, it will do all of that on tick. So literally every time we get a tick in the market, it will move your trailing stop. As soon as we get to 1500 points, it will place the order, regardless of what that candle does. And the same with the percentage, right? So that's what that does. Again, I would leave that to true. Offset pending, that is the distance between the opening range and the pending order placement. Again, we'll see that in operation in a minute. So that is where the opening range is. What it will do is, in this case, it will look 15 pips or 15 points above the opening range, and that is where it places the pending. So you can offset it higher. You could use a minus and offset it lower, but you wouldn't do that. You would always offset it higher because it's a breakout strategy. We're looking to break out. What this is designed to do is, when you get an opening range of your candle, quite often what you will find is you'll get a retest of the high of that candle, and then it will pull back. If you set your pending order exactly at the high of the candle, what you will do is, on these double top retests, you will get pulled into a trade that might go like that. So by offsetting your entry by a very small amount, you won't get triggered on these double tops. What I do is I just make sure that is bigger than the spread by my broker. So my broker's typical maximum spread is 1, okay, or 10 in this case. So I'm offsetting it by half a pip, basically, above their maximum spread. So if we get a double top, the spread will be there, my entry will be here. Okay, so that's what that does. Take multiple trades if at the same level. I explained this briefly before. If you have opening range 1 there, and then the second candle is here, so you get opening range 2, and then this third candle is here, so opening range 3 is also at this level. What you have is 2 trades at that level and 1 trade at that level. So take multiple trades at the same level. What this will do is it will enter 2 positions on a breakout there, because one of them is opening range 1 and opening range 1 and opening range 3. Or if you set that to false, it will only place 1 pending order at each level. Again, I'll show you this in operation in a second. Info panel turns that on or off. That's the display you saw there, which gives you all the data. And a magic number. Every single trade, every single instrument you place this on has to have a unique magic number. Magic number is basically what Metatrader 4, Metatrader 5 use to determine what is being traded. So this EA runs on magic number 999, so it will manage all trades with magic number 999. So I'll show you how you can tell. If you hover over any active trade that uses an EA, you'll see that here it is placed by expert. Expert ID is 2. If I look at this trade here, when it works, hello, this one was placed by expert ID 10. Okay, so that is the magic number 10, and the magic number for that one is 2. So you have to have a unique magic number, because what the EA will do is it will only manage the trades that it has taken. So it will go, is this trade taken by expert 999? If yes, manage it. If no, I'm not going to touch. All right, so you need to, if you want to run this on the DAX, the Nasdaq and the Dow, no problem. You can put it on the same broker, 1 on each chart. Just make sure every single one of them has got a unique magic number so that it manages those individual trades itself and doesn't get confused and manage other trades. Okay, so that's the settings. Any questions on settings? Stick them in the chat now. But I am going to run through some examples now with the EA running. Let me just move my trades away. Right, so let me just load a set file. So I'm going to load up some set files I've got created just to show you how it will work. So this set file here is literally just going to trade the 5-minute opening range. So you can see that I've got here, take range breakout 1 set to true, and I've got 2 and 3 set to false. I've got continuous mode also set to true, and I've got my opening range breakout at 10 and 10:05. So what this is going to do is it's going to take the opening range of the 5 minutes and it's going to enter it and try and get a trade. And if that trade fails or closes out, it will continue to take those trades. It's going to enter with a trailing stop of 30 pips or points. And it's going to, if I get to my profit target, tighten that trailer to 10. Okay. It's going to try and get $1,500 profit a day. It's going to close out if it gets to $2,500 a day in a day. And it's going to use $1,000, 1% as a risk. All right. So that's basically what the EA is going to do. So we'll just show you that running in action. Just close some of these other ones down that we don't need. Right, so you see all the data's up there. 100K account, target is 8K. I've got 8K left to go. I haven't banked anything yet. My daily profit target is $1,500, and I want to close out if I get to 2,500 in loss. Okay, so let's run forward a little bit to the first opening range. Okay, so here is our initial opening range. So this is our 10 o'clock candle. There, 10. Which is 9 a.m. Frankfurt, 8 a.m. UK time. So there's our opening range, and it's placed a pending order, 15 above and 15 below. Okay, so you've got a sell stop there and a buy stop. Automatically calculated my lot size based on a $1,000 risk. So when this trade stops out, it will give me a $1,000 loss. All right. We've got the opening range running, and as you can see, obviously that's just ticking away. I'm just going to fast forward this a little bit. You can see you've got the profit running as well here. As you can see, we've got 46 pip opening range. 459 was our opening range stop. That's because I've got this one set to 100%, and it's, it's one pipette out basically, but that will be to do with slippage. So today's close profit, nothing yet. We've got an open profit of 226. Our open and close profit combined is 180. So this basically, all this is a combination of your open and your closed. This is what we're interested in because we're looking to make 1,500. So that's the figure, the magic one. We want to be 1,500. So just let that run forward a little bit. Okay, so you can see it's drawn in opening range 2 and opening range 3, but it hasn't traded them, because I've said I only want you to take opening range 5-minute opening range. Okay, and we got a closeout there at $1,500. So that trade there was $1,500. My target's $1,500, so it's closed. It's closed out my pending orders. Yeah, and that's it. It's done for the day. So it's made $1,500. It's stopped, and that's a typical opening range break. Let's move on to the next day. Okay, so there's our opening range 1. That is 475. Opening range 2, which is this candle here, is 503. And opening range 3 is 811. One sec. Not quite gone in yet. Okay. Opening range 3 is there, which is 675. So there's our 3 opening ranges in. Oh, excuse me. Got alerts going off. 150 ADR on US dollar CAD in case you're interested. So you can see it hasn't taken opening range 1 and opening range 2 because we've told it just to take, open range 2 and opening range 3 because we've told it just to trade opening range 1, which is there. It's taken the breakout and it's automatically moved the stop down. So our initial stop loss was here and it's moved the stop down to there because we've got it set to trade with a stop loss of 300 or 30 points, haven't we? So the initial opening range goes in there, but it immediately trails the stop on candle close down to 300. So we've got our opening range, it's working, and it's automatically reduced our risk. So even if this stops out now, we're not going to lose $1,000. We're only going to lose somewhere in the region of 300. Okay, so we'll see how that one plays out. We're running a $300 profit at the moment. So that stopped out at $271 loss. Now, as soon as that stopped out on that candle close, it's placed a new pending order under that low because we've got it in continuous mode. So even though it's stopped out, we've said we want to get you back in again if we're going to break out to the downside. We don't know still at this point whether we're going north or south, obviously. So it's going to try and go south again for us here. Okay, stopped out again on the second position. Now we've gone long. Okay, you can see the stop is trailing up. We're at $149 overall profit, 850 on this trade. We're 729 down, so our combined profit is 100 and something. Let's see what this one does. It's trailing at $712 profit. So you can see here, because we've only banked $712, we haven't hit our target, so it hasn't cancelled this pending order off. Still in play. If price was to push back down, back under our opening range high again, we would take another entry. It would place another pending order, because we've told it in continuous mode to keep trading the DAX until you either get there or there. All right. So that would continue to trade. So that's an example of just using one of the pendings. Let's see if it comes back down. No, it didn't. Okay, so that's using one set file. That's just using a 5-minute opening range break, which was that set file there. This is using a scalp setting, opening range 5 scalp. The difference between this one is we are looking to risk $750. We're only looking to make $500 profit a day. So what this is looking to do is, on these opening ranges, it's going to try and just grab a very small movement, bank $500 and stop for the day. So it's a one trade set file. So it's designed to try and get you in and get you out as fast as possible. So this is good for scalpers who just want to be in and out and be done in 5 minutes. Very risky strategy, obviously, because you're risking more than your target. I'm risking $750 to try and make 500. So it's a negative risk reward strategy. And also, we are not going to catch any of those big runners. So if something breaks out and goes parabolic for 300 points, I'm not going to get it. So again, but it's another way that you can trade with it. Okay, so here we go. We're, sorry, that's $900 in profit. Daily profit target for 1,500. Did I not hit the save button on that one? Scalp. Okay. Yeah, sorry, I didn't hit the OK button. I must have hit the cancel. There we go. Daily profit target 500. So there we go. So you can see that was in and out very, very, very fast on that opening range break. Oops, let me just move out a bit. Yeah, so there's our opening range. There's our entry. We're out. Literally 2 candles, done. $500. We've stopped for the day. We've cancelled our pendings. That's it. We're not going to trade anymore. Yeah. So that's a much tighter strategy. You see the risk on this. See our stop loss here is trailing per tick. Because we've asked it to tighten our stops when we get to our target level, it started to trail our target, our stops very quickly. Does that stop? Oh, no, sorry. No, that's the wrong one. Sorry. Scrap that. That was the stop of the other position on the other end. So that one stopped out basically because we didn't trail, because we're not looking to trail, are we? We're looking just to get out on this one. I only set these set files up this morning. I've forgotten what each one's doing. But anyway, first range breakout failed. Second range breakout worked. Closed out. $500 profit. Let me just load another set to give you another example. This is 5-minute opening range with maximum loss. So I've said to it, I want you to only trade the 5-minute opening range breakout, and I want to lose up to 4,500 a day. So with a prop firm, a proper valuation on a 100K account, maximum you can lose is $5,000 a day. Then you have to stop trading. So this is a safeguard to basically stop you blowing the account at $4,500. So this is going to mean I can survive longer if we get chop before the EA stops trading. So on choppy days, this one will trade for a little bit longer. Because I'm only using one entry though, it's a lot more difficult to hit target. But this does pretty much the same thing. But you'll see some days on this, if I let it run for a bit longer, you'll get these horrible rotation days where if you have a high stop, a high loss limit like this, you'll find it will make big losses on some big choppy days. So I always recommend keeping that a lot smaller, somewhere around the 2.5%. Anything between 2 to 3% really is maximum loss you should sustain in a day. Otherwise, it's just not a good trading day. The conditions have got to be right for this strategy. It's a breakout strategy. If you're going into a rotation day, i.e. a range-bound day, mean reversion strategies work, breakouts don't. Okay, so there you go. So that's, I don't know what that made there, I didn't see. So this is a choppy day. There we go, a bit of a choppy day. We're $900 down, $1,000 down. $1,300 down. Not quite sure what that ended on, but it was a lost day. But the idea behind this set file is just to demonstrate to you the difference between having this closeout level here, set high and set low. The higher you set this, the more it's going to trade for the day, but the more danger you're going to run into of having a high loss day. Made $1,500 there on that trade. So that was a winning day. Right, this is a good example. This is the day I wanted to show you. You're going to get the odd day like this. They don't happen very often, but this is what I call a Christmas tree day. Normally, because I've got red and green candles, as you'll see on my charts, I use red and green candles. But Christmas tree days basically goes green, red, green, red, green, red, green, red. Hideous, hideous opening range. Anybody that's trading breakout strategies is dead today. Yeah. You do not want to trade in these conditions. You won't know these conditions are in existence until you've traded them. And this is the double-edged sword, isn't it? So close profit is 2,500 on this day. I want to be closing and stopping trading. So this is why I don't recommend using a big maximum stop loss. If you're going to get into one of these days, you could quite easily take a full loss. And you don't really want to do that if you want a proper valuation. Sometimes it will recover and we'll have a big trend breakout on this day. And I find in my experience trading the indices, I've been doing indice trading quite a while. When you get these choppy days, you get a choppy day. When you get a choppy open, you get a choppy day. So usually those are the conditions I think, right, that's it, I'm not trading it. I'll wait until the next session. DAX session isn't going to work. Let's trade the Nasdaq this afternoon. Forget it for the morning. Yeah, as you can see, this is did exactly that. Just chopped around all day. Absolutely destroying your account. So we're going to end up with something like $3,500 loss that day. So not the end of the world. We can get that back in one trade. If we're using a different set file, which I'll show you in a minute. But you see, we made it all back. We're pretty much back to where we were. So that's an example of using a maximum stop, which is what I would not recommend. This is using a maximum stop loss, but using a runner strategy. Now, the runner strategy means that what we're going to do is instead of closing, using this setting here, close all trades and stop trading when you hit your target, what I want you to do is just tighten the stop loss up when we get to that level, to the $1,500, and let the trade run. Okay, so what this will do is it will allow you to get more winners. And I'll give you all these set files I'll put out there so you can go and test them all yourself. But so you'll see when we hit the $1,500, when we get to a day that hits it. There we go. That's probably, is that going to go? Not quite. $300 there. Okay, 690. No, didn't quite get that one. This is probably not going to actually do the example, is it? Now I've set the set file up. Just looking for a strong opening range break, but not going to get one. But what this set file will do, if I can find the day, or this setting rather, it's just to demonstrate the setting. It will just tighten the stop up as we get to our target. The target's actually too high on this set file. That's probably why. Here we go. Right, so here we go. This one will probably work. So we're at $1,100 and we're trailing our stop by 330 pips. So as we push down, here we go, and we reach $1,500, what you'll see is this will start to trail on tick, really, really tight. It's not going to get there, is it? If I'd have prepared better, I would have found an example of it working. If I didn't. There we go. Right. So as you can see now, we're trailing on tick. Yeah. Because we've got our target hit. We just want to let this run. If this thing's just going to run and run and run and run and run, as it will do. And the beauty of this setting is news. When you get a news spike, yeah, and you've got the setting set to just tighten your trailer, you can ride some massive news. Think of non-farm payroll, yeah, where we're moving 200% ADR in a candle. You'll capture the whole lot. It's amazing. But it's not going to work all the time. So that is an example of that. setting running there. So close all trades and stop when target hit set to false. It doesn't close out the position, but if you've hit your target, obviously, then it will close everything out, but it will just start to trail tight for you. Another set file I've got to look at is this one, wide stop. So again, wide stops, completely up to you. They all work. But a wide stop basically will, as it says, will keep your stop loss very, very wide. The problem with it is, as you will see, you can leave a lot of money on the table. But it will also capture those really, really big, long, strong days for you. Now, all these examples I'm showing you are not optimized at all. These are just taking initial opening range breakouts, which is not how I personally use the EA. I use the EA to trade multiple opening range breakouts, because when the opening range breakouts work, I want to have multiple positions on in my favor. So these set files are just trading the 5-minute opening ranges. The one I've got here, this one here, is the 5, 10, 15. So what this will do is it will trade the 5, the 10, and the 15-minute opening range breakouts. It's going for a $2,000 a day target with a $2,500 loss. It's risking 0.5%, $500 per trade. It's got a maximum 80 pip opening range. So if we get a big, strong, massive opening candle, I'm not interested in trading it. And it's using a 600 pip trailer, but tightens up to 200 when we get to a profit target here. The important thing to think of here, or to look at here, is taking multiple trades at the same level. So what we're going to do is, when we get 3 opening ranges like that, we will have 3 pending orders on an opening range high break. What this is going to do when we get those trades on is it's going to make us an absolute fortune. So we'll let this one run for a little bit, and you'll be able to see it running for a few days with lots of choppiness, lots of massive range breakouts. We'll just look at lots of examples of it basically. But as you can see here, we've got a buy on here, we've got a buy on here. So we've taken opening range high 1, opening range tie 2. We haven't taken opening range 3. Why? Because it's over 800 points. So it's too big. This range is too big. I don't want to take another trade at that size. In this case, it looks like it probably would have worked, but anyway, you never know. So we're sitting at $800 profit, 900,000. Okay, so we stopped out $440 on that. Now, again, important thing to remember here, we were over $1,000 profit there. If you'd have set your daily profit target to be 1,000, you'd have easily got that. I'm looking for 2%. I'm being aggressive here. This is a prop firm evaluation setting that I'm using. So I'm looking to try and grab 2% a day. I want to pass my evaluation in as the fastest amount of time possible. So I'm looking to grab 2%. If I was being not greedy, which you should be, and try and just grab 1% or 0.5% a day, which is very easy, you'll grab it an awful lot more of the days, obviously, but this is on an aggressive mode. So you can close this out manually. So you can use the EA partially automated as well, which is, again, how I use it. Take the opening range breakout and close it. If you get to $1,000 and you're like, I'm up $4,500 this month already, I'll take 5.5 and bank it. Done. That's it. Do it. Shut the trade. You don't have to let it obviously come back. But if you do run it full automated, obviously it's going to make sure it manages it for you, make sure you don't make a loss. So so that one just got 147 that day. This day we've taken an opening range break 1, 2, and 3 because all of them were under 800. So we've taken 2 trades there. We've pulled back. At this level, you can see these 3 arrows here. We've got 3 trades long sitting here, buy stops. So the reason I like using this take trades, multiple trades at the same level setting is and what quite often happens with your opening range, if you get an opening range breakout fail and you get stopped out, often it will go the other way. So what we get at the open is a false breakout and then a trend breakout in the other direction. I've just taken 3 trades in this direction. Now they will either work or they won't. If they stop me out, what I'm going to do is I'm going to take 3 positions in the other direction because the likelihood is that one will work. Right? And we'll see what happens. You'll see this happen a couple of times probably as we go. but it's quite a common occurrence on the day. So there we go. We've got 3 positions there that have stopped out. Sorry, 2 positions. We didn't get that third one on. Look. And this is, again, prime example of why we have our pending orders put down there. That didn't trigger because that candle didn't go down far enough to trigger it. So now we've gone in 3 long in the other direction. Yeah, look at that break. This is really, really common occurrence. So basically, there's your open, there's your false breakout, and there's your real trend direction for the day. We want to maximize that by getting into multiple positions. And obviously, as you can see, the trailers on all of these are all locked in now, so we can't lose. We've got $2,100 in profit. We've got a closed an open and closed $1,300. We're trailing it. If we get to $2,000, it's going to tighten that trailer up for me. But right now, you could close the whole lot out at $1,300 profit. Again, your settings, as you have this set up, will determine what these stops do, which is why I would always recommend, and if anybody knows me, in the live rooms, I don't agree 100% on full automation. I like the EA to take my trades for me, but I like to watch, because if that thing's made me $2,000, I want to take that $2,000. Yeah. If I'd have been using a tighter trailer instead of 60, I think I'm using on this one, instead of if I'd have had a smaller target and then asked it to tighten my trailer up to half, I probably would have got out here with a lot more profit. But again, every setting is going to give you a different result, but all results have the same outcome. They capture these big, big moves where they make you $2,000. Yeah, so we made $2,000 there. 1 trade. Opening range lows didn't trigger. We've got 3 opening range highs triggered, and we're out. Okay, so bit of a chop day, down 1,000 there. Again, chop day, can't do anything about it. Another choppy day. Still managed to eke a bit of a profit by the looks of things. There we go. So break-even day. Target hit, 2,000. Chop day. Again, right, so this is a prime example. We looked at this day before, didn't we? I'm out. I've had enough. This is not a trading day. You do not want to be doing range breakout trades today. This is a mess. Okay, and we know what happens after this, don't we? Chop. So we don't want to be trading on this day, and this is why it's good to limit this. Range breakouts either work or they don't. If they don't work, they quite often go into a range and they keep failing. It'll either break out and it will go or it won't. And if it doesn't go, we want to minimize our risk. We want to protect our account. Capital preservation, especially with prop, very, very important. Okay, we're going to make it back. We know we're going to make it back. We lost $2,500 yesterday. We just made $2,000 back. Bang, we're back into $3,000 profit. So you're going to get these days. When it's going like this, just got to accept it. You're going to have these days, you're going to lose, right? Another choppy day, survived that one, made $2,000, up to 5K profit now. Choppy, 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 stopped out, $2,500 loss. Again, all these figures will, make them your own. This is a 100K account, so this is trading large size, obviously, but you won't be trading large size if you're not trading a 100K account. So you got $4,000 profit there. Now we're sitting on nearly 6. See where we got out here? Yeah, that's because I asked it to get me out of $2,000, and this is why I say do not use a TP. Yeah, look at what you missed. Look at what you could have won, as they say on the game shows. Yeah, this is a 6K day. You missed it because you asked it to get you out at a particular profit target. And again, I think I've got a set file that shows you not having a profit target. But again, this is for prop. This is designed to pass prop. We're up to $7,800. And again, on that day, you wouldn't have set that 2,000 target, would you? You would have set it at 2,170, and you'd have passed the evaluation that day. Yeah, let's go back and look at that day. You'd have told it to get you out here. Done. Thank you. Passed. 20 days we passed. Okay, so there you go. So that's an example, obviously, of that set file running. So that's 5, 10, and 15-minute range breakouts. We've got 5, 10, 15 runner. Difference between this one is instead of closing at that, it's going to automatically minimize our trailer and basically tighten the trailer rather than closing the positions out. So that's the difference there. I'm not quite sure how many days this is going to really show that happening, but we'll see. That day wasn't, was it? Just trying to think of the days that we got the big runs. So, you know, there's once or twice a week, you're going to get these days where you're going to get these massive runners like this. Unfortunately, this one stopped out on the previous. So if that had been set to 1500, that would have tightened up and made us a very nice profit. So again, you need to adjust this. As I say, this is on super aggressive at the moment. It shouldn't be this aggressive on that size of account. But anyway, so there's an example of that one running. There you go, saw that there. So instead of making $2,000, we made 2.5. So instead of 2% return, we got 2.5% return because it tightens stops up for us. Yeah, so it's better to let it run. Let it run. Don't just close it at a level. Let it run. And some days you're going to catch these huge, 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 huge moves, like we've had this week actually. And so we got a spam bot in 5, 10, 15 opening range. Let me just get rid of this spam bot one sec. So this set file here is running on, this is an example of the smaller stop size. So this one is running a percentage of opening range at 30. Okay, so instead of using the opposite end of the range, I've asked it to use a 30% stop. Okay, so again, we'll let this one run for a little bit just to show you what happens when you use really tight stops on the strategy. So the stop losses we're placing are really, really tight. You can see here. So that is that stop loss. That is that stop loss. So instead of opening entry there, our stop loss being here, it's actually placed it there, which is 30% of the opening range. And that range there is 30% of the opening range. Right, so it's much, much tighter. You see the size of the lots, 26 lots, 34 lots, 19 lots. So these are much, much, much bigger positions. Look at the profit. Yeah, we hit target really, really fast when you're using that sort of lot sizing. But the risk is very, very, very small because we just use, the risk is the same, it's $500, but the risk in size is small. It's only 30% of the opening range. So what you find with this strategy is you will get stopped out probably a lot more, but you'll also hit target a lot more and a lot faster as well. And on those big run days, if you don't set a 2,000 target or loss, here you go, look, right, prime example. We made a $2,000 loss on the opening range break to the downside. Okay, then we broke to the upside. Look at the profit, 7.5 grand in profit. We've got 5,500 at the moment. We've only got an 8 grand target on this evaluation. We're on day 2. We've hit target day 2. Pretty much. We're not far off, are we? Let's let the trade play out and see what it does. I think it pulls back from there, doesn't it? There we go. So we managed to close out 5,500. So we've banked now 7,635 in 2 days. Yeah. So again, if you're wanting to be aggressive, the tighter the stop, yeah, the higher the lot size, the less distance you need to travel to make your targets on a daily basis. So tighter stops will get you evaluations passed faster. But long term, I wouldn't use them to trade live account because on those choppy days, you're going to get many more days where you hit your max loss. So again, backtest it, try it, see what suits you. Everybody's got a slightly different trading style and different way they want to trade. Yeah. So there you go, 2.5 grand loss. Very, very quick because we're using a tiny little stop loss. I think this is actually trading off $1,000. Oh no, it's a $500 risk. Yeah. So we're risking 1.5% per entry if we're using 3 entries at the same level, obviously, aren't we? So, and look at that. What a shame. If you'd have set that to be 4,500 on that day, you'd have caught that. Again, there is no one setting that works. They all work, but some days that needs to be bigger. Some days that needs to be bigger, smaller. And some days the stops need to be tighter. Some days they need to be looser. You're never going to know that. You can't set that. There is not one set file that suits all. So you just got to try them all. And see which ones work best for you. But as you can see, with tight stops, you are going to get stopped out a lot. You're going to get a lot of down days. But you're also going to capture these massive 5 grand days. So for passing evaluation, there you go, 5 grand in a day, 7.5, 2.5 loss, 2.5 loss. That's a choppy day, 2.5 loss, 1,600 win. Going to take more trades. 2.5 win, 1,400 win. Yeah, we're all in profit. We're still at 4 grand profit here. I'm just letting it run for a bit, see what happens. 3 grand profit, 2.5 grand profit, 2.5 loss, 4.5 profit. Again, we've passed, I don't know, we've passed 3 evaluations, haven't we? Look at that, we missed. What a shame. What a shame. Why did we miss that? Because that trade there that closed out hit our target. If we hadn't have had a target set, oh my God, don't even want to think about the win. These are the days you need to wait for. These are the days that pay you the big bucks. So there's an example of some set files. I'm not going to publish loads of set files. I've only tested the DAX. I haven't tested anything else. I haven't had the time. So and to be honest, that's all I'm trading now, the DAX. I will trade a bit of Nasdaq, but mainly I want to trade the DAX. So you can obviously use this strategy on multiple accounts with multiple instruments. It's entirely up to you. If we have a look at the E8 account, this is my other trading account. You see that's the one I took this morning. In the strategy tester, on this particular account, because it uses 2 digits, if I load up the set files, that one, for example, you've got to make adjustments because we know that we use 3,000 instead of 300 on this account. All right. So the settings that you need to change are going to be anything to do with stop loss distance or take profit distance. So fixed stop loss, instead of 400, that would need to be 4,000 if you're going to use a fixed stop loss. Your ranges need to be 1,000 to 8,000 instead of 800 and 100. Your trailing stops need to have another 0 added to them as well, as does your add to single trades and your pending offsets. Okay, so that also needs to be set as well. So you need to just amend those to increase them basically when you're going to use it on a broker that uses 2 digits after. And as you'll see, that will put everything in the right places because we're using 2,700 instead of 270. This is obviously a different date, but yeah, so it still works in the same way, as you can see. So I made 2 grand that day, still at the target. Everything was in the same places and stuff. This is a different, when's this? December, this is December 22. Oh yeah, so this is running on broker data. This won't be very good quality, but so yeah, I mean, you can see obviously it's not using TPs, but the TPs are set all the way down there, which is 1,000% of the stop loss, which is 48,000 pips instead of 4,800. So yeah, it's all adjusted basically. But the way to tell, obviously, the easy way to tell is obviously you just put, have I got 1 or 2 digits after? If I got 2 digits after, I add a 0. If I haven't, I leave it as is. Okay, So that's it. That's everything covered. Questions on anything? Questions on strategy? Questions on the EA? Let me have them. Let's have a look in the chat and see what we've got. Does the account balance itself, or have we to put it in? So you need to put the account balance in. As I said, all this does, all that does, and that does is it displays on that info panel. Yeah. So the info panel here, all these settings do is it takes those and plonks them there for you. It doesn't know what your profit target is. I mean, these are really for prop. You don't really need them. The only thing that really is important is this, your profit target for the day. Yeah, and the maximum you want to lose in a day. You should be using these regardless of whether you're on a profit valuation or not. You should be having a target, ideally, you want to do for the day, and you want to have a maximum. Yeah. Do I have optimal presets for this already made? I don't like the word optimal because that means over optimized to me. But yeah, I've done testing on the EA. I've tested it thousands and thousands of times. So I've got all these tabs down here which are testing variations of settings. So this is what I'd call a system parameters permutation test. SPP for short. So as a system parameters permutation test, basically what it does is it takes various settings of the EA and randomizes them. Okay, so in this example here on this particular tab, I'm trading the DAX on the 5, the 10, and the 15-minute time frame breakouts. Okay, and I've asked it to try different daily targets ranging from $500 to $2,500. I've asked it to test whether or not it's better to close when I hit that target or not. I've asked it to vary the stop distance between 30 to 125%. I've asked it to change the trailing stop between 200 to 1,000. And I've asked it to change the tightening of the trailing stop from 200 to 400. And I've also asked it whether it's better to take multiple trades or single trades. As you can see up here, you might not be able to see because it might be quite small, but it did 1,500 tests. So there's 1,500 variations of the EA running. And of those 1,500 variations, 1,462 passed with a profit. So it means that there's 38 parameter permutations out of all of these settings that don't work. Everything else works. All produces a profit. But it will produce different amounts of profit and different drawdowns. So this one did a 12 grand drawdown and returned $84,000 in profit. Just realized that hasn't actually set to money. Just being my normal annoying self. Everything's got to be perfect. So that one made 84 grand in profit. This is over 3 months and did 12 grand worth of drawdown. This is with the set file you just saw me using. This one. This was the 5, 10, 15 opening range with a 30%. This was the last set file I showed you a minute ago. That's this setting here. Return on drawdown was 5.55%, so it returned 70 grand and 12 grand of drawdown. But all of these work. All these system, doesn't matter whether you set your daily target to 500 or 2.5, whether you ask it to close it or not, whether you ask it to use a 125 stop or a 30 stop, trail it by 60 or 20, trail it by 30, whatever. All of this produces the same thing, which is profit. That one made 22 grand and drew down by 8 grand. That one drew down by 12 and made 33, drew down by 10, made 27, drew down by 12, made 30, drew down by 5, made 12, drew down by 9, made 22. You can do all of this testing yourself in the strategy tester. That's that setting. This setting here is 5, 10, and 15 using 110% risk, 110% stop. 1,500 tests again, produced 1,344 positive results. This is just trading the 5-minute opening range. 2,400 variations of the settings on that one. We would produce 2,385 results positive. Yeah, so you get the point. When you use the EA, yeah, it doesn't matter whether you use 1,500, 3,500, 2,500, whether you set this to 1,000 or 2,000, whether you set that to, it doesn't matter. I've tested all the various parameter permutations you can get that make an impact. They all profit. So, but it was based on market conditions. This is back testing. Yeah. I've no idea what's going to happen moving forward. No idea. I've no idea if Russia's going to launch a nuclear weapon and the markets are going to go flat for the next 6 months. If that's the case, this probably won't work. So back testing is only giving you optimal parameters for what's happened in the past. What happens in the future, don't know. How's the EA doing today? So far today, made 728 on that account. I made 360. There's my VPS. Let me open the VPS. I'll show you. So made 1,874 this morning on this account, which is 100K. Sorry, that's the wrong one. Yeah, no, sorry, that's not a VPS. So I made $364 on this account, which is a 25 grand account. Made $728 this morning on this one, which is a 36K account. This is a 100K account, and it made it 1,800 this morning on this one. So this is today's trades. That's yesterday's trades. So that's today. Yesterday was there. That was yesterday's opening range break. We've had 2 really nice opening range breaks in a row, which is lovely. It's not going to happen like this all day, every day, is it? But yeah, it's doing all right. Doing well. The default values are based on which type of broker digits? The default values are based on single. But the default, you never use the defaults, right? The default values, you don't use them. They don't work on anything. Yeah. If I set this to default, it resets everything to 10 to 10.15, 10 to 10.30, and 10 to 11. It sets that to 1 to 5,000. It sets all these TPs wrong. There is no default setting, okay? And purposely, this is done so that you don't use it. I don't want you using this default. Go and find settings that work. Also, you've got to have, unfortunately, when you put a product through the MQL5 market, it has to be tested on the hourly and the 30-minute chart on Euro US dollar and US dollar Swiss. Unfortunately, an M5 opening range breakout strategy designed for the DAX index does not work on Euro US dollar. So I have to put settings in here that get it through the evaluation system to get it onto the marketplace. So don't use this. Use set files. I can give you a couple of set files. There's loads of them that were published on the blog post for the previous version of this, but they won't work. So I'll be putting some out. What I'll do is I'll put out some of these ones just to give you an example. All of these, will and won't work on specific days, but how you want it to work and how you want to pass prop is entirely up to you. If you're using it for prop, if you're not using it for prop, it doesn't really matter. They all work. I've tested it over 2 years on a non-prop basis, because you will get periods of drawdown where it will probably blow an account. You can't control when you're going to get choppy days. I'll give you an example. Look at before Christmas. All right. How do you think it did here? And here? Actually, it didn't do bad there and there. That and there. There. I told everybody not to trade with the EA before Christmas. What did they do? It really chopped you to pieces. You may get periods where you get multiple chop days in a row. And if you start an evaluation on a prop firm, when you're running into 4 days of chop, you're going to get killed. Thankfully, chop days don't happen very often. Like I say, rotation day, tight rotation days, even that's not too tight, but tight rotation days don't happen very often. Most of the time on stock indices, we get nice big candles. The body of the candle, if you get a big body candle, you get a profit. End of story. That's it. You get a profit. Because what it means is it broke. And if it breaks, you make. End of story. If it breaks and retraces, you make. The days that you will find you will get stuffed and there's nothing you can do about it are the break, reversal, rotation days. You can't do anything about those. So, please know when V2 is published. I've got a session in, oh my God, I'm going live in over 10 minutes because we've got the New York session starting. So after the New York session, I will publish the EA. Not only a nice little EA, the testing is beautiful. Yeah, well, testing is important. Testing is the important thing. Strategy development and testing is the most important thing. Without it, it doesn't work, does it? When given a set files, please specify the type of broker to use for either 1 or 2 digits. These will make adjusting them easier. I suppose I can produce a different set file for a 2-digit and a 1-digit broker. But it's very easy. You just put a naught on the end. Whenever you're testing anything, right? If you stick this in, if you go live with this, right? Let's change it. Look, let's put this to back to 100. Actually, let's just load a set file. Let's load that set file, right? And I'm going to change the trailing stop, right, to 60 and 20, right? Stick it in the strategy tester. It's not going to take a rocket scientist to understand that it's not right. When it starts to trail your stops and stop you out constantly, look at the trades it's taken. Yeah. Look at this stop out, trade, stop out, trade, stop out, trade, stop out. It's obviously set wrong, isn't it? Is it a good thing to have a trailing stop at 6 pips on something that had an opening range of 475? No, of course it's not. Should be able to work this out. But I can publish both versions. It's not a problem. People have to take accountability for themselves. You've got to be able to go into the strategy tester and test stuff. Right, I'm going to leave it. I'm going to have to leave it there. So that's the end of that strategy. So that's the opening range breakout strategy. That's the opening range breakout EA. There's links in the description to everything. So go ahead, fill your boots and use it. I will be launching this version of EA version 2 shortly this afternoon in an hour or so. I will post in the Telegram group when I do. And yeah, and go and use it. I'm using it. I have been using it for 2 weeks and it's doing absolutely fantastic. So enjoy. I hope you enjoyed that. If you're going to join me for the live room, I will be back on again in 10 minutes for the New York Open. Other than that, hope that's helpful. If you want to trade it manually, go ahead. Obviously, you don't need to use an EA to do it. You can trade it manually. It's very easy. You put pending orders above the highs and the lows of the opening range. Done. Just got to manage it yourself. But anyway, so that's the strategy. That's the EA. So hopefully you enjoyed that. And if you've got any questions moving on from here, come into the Telegram group. Again, there's a link on the website, which is in the description below. Or you can join any of the live streams, which are every day. Okay. So have a good afternoon, and hopefully you enjoy the opening range of the New York session, which is about to start. And if you're going to join me for that, I will see you in 10 minutes. Thanks very much.